Good morning, afternoon, or evening, ladies and gentlemen. Allincrypto here, and welcome back, guys, for another daily cryptocurrency market update. It is Friday, and hopefully you're all having a fantastic one. As it's Friday, we'll try and keep this daily market update short and sweet, but make sure you guys are updated on everything happening within the crypto space and further afield. It's been quite a heavy week of macroeconomic data, which we'll be doing a little bit of looking at perhaps how this has affected the market and certainly monetary policy, perhaps. We're going to start the video off with a funny clip of Gary Gensler, who was recently interviewed, and one of the remarks from the interview was that the judges seem to be fairly sympathetic to the crypto space, and his face says it all. So we'll start off with a clip there, then we'll dive into a little bit of the Bitcoin chart. We're going to talk about some comments made from Ray Dalio. Ray Dalio is one of the greatest hedge fund managers of all time, somebody I have great respect for. I've read all three of his books. He's wrote more books than the principles, economic principles, and of course the book on debt. But they are three great books that are well worth reading. Someone I highly respect. He recently made some comments in regards to being in cash, not bonds, and actually there's a crypto-related side of things with bonds, because bonds going up have historically been correlated with equities going up, but there's kind of an inversion of that taking place at the moment, which we'll talk about. And then we're going to get into some big crypto news from the likes of Deutsche Bank that are officially now looking to hold crypto for institutional clients. It's a big move. And then we'll talk about an article that we published on Chainlink. Basically, the Australian bank ANZ is now using Chainlink CCIP for the facilitation of tokenization. It's a $1 trillion+ bank. And then, like I say, we'll do some sort of macro housekeeping, if you will, is what we're going to call it. So without further ado, guys, let's dive into this rather funny clip of Gary Gensler in a recent interview where he was continuing to bang on about the fraudulent nature of the cryptocurrency space.
So whether it's about broker dealers, whether it's about exchanges, whether it's about custody, we have taken up the path where we find it appropriate to put out the public comments and proposals. But there are laws, there are rules, not just here at the SEC, but across a number of areas. I think this is a field that a lot of it just wants to run past that and suggest otherwise.
They do seem to be finding some sympathetic judges. So you have to be careful on that one. We've done
comments.
Awkward. Jeez. I mean, you know, I think Gary Gensler is just doing such a poor job of this. He's applying old regulations to a new technology, which I don't think is going to work. But we will see. I think he's done a very poor job, and I think he's largely stifling the industry. Maybe he's doing that on purpose. Who knows? Let's dive into a little bit of the charts before we move on. You guys know the plan for us. Ultimately, we've been laying out a lot of what we think is to come. And, you know, right now, you are still holding support. And we have warned people against being short right now. You know, you are getting this somewhat looks like bottoming out structure to me. Actually, Ethereum was one that I was looking at earlier. You know, this looks like bottoming structure, at least in the short term. So short term, we've said for September, expect September to kind of play out, Rectember. But actually, there's a number of scenarios that we've been looking at. We've been looking at the fact that the sort of impulse you've had this year is in a 5-wave fashion. It's in a 3-wave kind of fashion. You know, maybe you're looking at that deeper ABC correction. You've got definitely a danger of a head and shoulders with this as a neckline setting up. Key level, you know, this level runs all the way back into the head and shoulders that we have, the inverse, head and shoulders that we have. So this is a key level. My worry in the short term is that this is an A into a B and then into a C, which sets up that head and shoulders. That's the bear case for us. Of course, the bull case, you know, for me, the levels that I'd really want to see taken are 28,500. So this base here, I'd like to see you at least get back above then. So, you know, your bull case for me, and this is kind of what I want to see, is something like this into the end of September. You know, it doesn't have to be as long as that, but something like what it's doing, and then a pop to the upside in a kind of wedge-like fashion. You know, I want to see a similar thing, and this also was a head and shoulders that people were very, very worried about, to what we saw over here. You know, this had a lot of people, I remember trading it actually to the long side. This had a lot of people very, very worried, and actually you had this kind of bottoming like structure that very much inverted. Really messy technical analysis here, guys. I'm probably getting my ear, I can hear my ears ringing. But this inverted, and I think this is your kind of September going into October, November, which are historically very bullish months for Bitcoin. So this is kind of what I'd like to see. Of course, if it just wants to show strength and rip and take out, you know, 28,500, and then of course come and attack these levels and take them, then it's full send. But this is kind of how I would like to see Bitcoin fix itself, with a kind of downdraft of right now uncertainty in regards to inflation, which we can cover in a second. In fact, we'll do that now with the kind of headwinds that Bitcoin's facing. Of course, you had CPI that came out. We covered it. We did an article on it at allincrypto.com, where we looked at the fact that inflation came out, CPI at 3.7, core inflation came out a little bit lower. And then yesterday we had PPIs, which came out pretty aggressively. You had the ECB, which actually decided to hike rates instead of pausing them, which I think most people thought was going to be the case. Regardless of, and I'll pull up the Fed watch tool, regardless of this though, however, you didn't see much of an increase in terms of percentages or probabilities given to a rate hike in about 5 days. So I don't think they are going to hike rates again, whether they do it in November then or an intra-meeting one, we'll see. But regardless of your higher inflation, you didn't get a change in this, although you did get a rally into the dollar, which is historically, or should be, downside for Bitcoin. Dollar's in a key area. When you think something's going to turn, often it won't. You know, I've been on the wrong side of many trades that I've, you know, been sort of like crossing my fingers and hoping that it turns, and I've been going, hang on, how long can this run for? It can run for until you tap out, basically. So we're not betting against the dollar right now. The dollar had a really nice day yesterday. Bitcoin and the stock market did quite well under the back end of it. And I think this is more to do with a kind of safety trade, people getting into the dollar at this point with all the uncertainty. That historically is quite negative for Bitcoin. However, Bitcoin is showing a little bit of strength here. It does look to be getting, certainly on the daily, a little bit toppy. The volume isn't half bad, but it's nothing, it's nothing necessarily to write home about. So we will be watching everything. Certain altcoins for me, Ethereum looks, this looks like at least a short-term bottom structure for me, that it could very easily pop out the top of. Yeah, so I think you could get a little bit more upside. The question is does that upside lead to that head and shoulders, or does it, lead to something more monumental coming in the back end of September? We will see. We've done a little bit of macro housekeeping. Let's move on to some comments from the man, the myth, and the legend, Ray Dalio. He's the reason you have the chicken nugget, ladies and gentlemen. Without him, McDonald's actually would not have launched their chicken nugget because they couldn't fix the price of chickens. And then the chicken farmers couldn't fix the price of grain. He figured out how to do that with futures. Marvelous individual when it comes to the markets. Ray Dalio says to hold cash temporarily, but don't buy debt and bonds. So for the past 40 years, you could have just bought bonds and debt, basically, and you'd have done all right. They've been in a bull market for 40 years. I think there was the end to that, or a disruption to that, certainly, with the events of March 2020. And here are some key points from this article. Amid mounting concerns over rising interest rates and inflation levels, Bridgewater Associate founder Ray Dalio said he prefers cash and does not want to own bonds. The billionaire investor pointed out that when debt accounts for a substantial share of a country's economy, the situation tends to compound and accelerate. Dalio says the biggest mistake that most investors make is believing that markets that perform well are good investments rather than more expensive. He goes on to say, I don't want to own debt, bonds and those kind of things. The founder said, temporarily right now, cash I think is good and the interest rates are fine. I don't think it will be sustained that way. He then goes on to say, believing that markets that perform well are good investments rather than expensive. He then extends, we're at a turning point of acceleration, but the real problem comes when individuals or investors don't hold the bonds because it comes as a supply and demand. One man's debt is another man's asset. The supply and demand imbalance isn't just the amount of new bonds, it's the issue of do you choose to sell the bonds, he explained. So there's a real issue here. He then goes on to finish, when the interest rate goes up, the central banks then has to make a choice. Do they let them go up and have the consequences of that, or do they print money to buy those bonds? And that has inflationary consequences. So we have a thesis on this channel, and if anybody becomes a Patreon, please, please, please watch. First thing you need to do is watch Sunday's meeting. We have a thesis on this channel that markets are going to actually do very well into a 2008 style crash. And there's many narratives that could see that play out. One of them could be AI, for example, with the stock market. And one of them could be this decision that Ray Dalio is talking about. If you understand the bond and debt market, it's money, basically. And at what point do the Fed pivot? We already saw a kind of sort of pivot with obviously Silicon Valley Bank when they had to step in, which was caused by the bond issue. And then do they have to turn the tap back on? Because the inevitability is that they will have to do that. Otherwise, you get a complete collapse of the entire system. The question is how does that unfold? Is that a sharp stab down, which sees yield spike through the roof? You've got lots of people talking about yield spikes, which would probably have some sort of negative connotations for equities, or is that more of a kind of soft landing where inflation comes down and they transition to going back to supporting markets, and most notably the bond market, which they kind of have to support at this point? So we're getting really into a kind of macro dynamic and dilemma. But it's interesting that Ray Dalio said he'd rather hold cash than bonds, at least temporarily, whether to get back into them when the Fed decide they want to come and start supporting things again. The things for us to watch as crypto investors. Let's get into a little bit of crypto-specific news. If anybody hasn't checked out our website yet, please do come over to @allincrypto.com. Sorry, not @allincrypto.com, just allincrypto.com. You can check me out at Twitter @realallincrypto.com. We are publishing some groundbreaking articles on projects that you just simply don't see covered in the space. This is one that we published recently, today, and it talks about Australian bank ANZ, uses Chainlink CCIP. Very, very interesting. This is a huge announcement. Chainlink are absolutely changing the financial landscape. They're one of many. We do have an AI bot that will actually read it to you. So this is another big partnership. We're going to see many of these. Moving on, Deutsche Bank to hold crypto for institutional clients. This is big news. This is from Reuters. Deutsche Bank has partnered with Swift crypto firm Taurus to provide custody services for institutional clients, cryptocurrencies, and tokenized assets. Taurus said in a statement on Thursday, the partnership means Deutsche Bank will, for the first time, be able to hold limited numbers of cryptocurrencies for its clients, as well as tokenized versions of traditional financial assets, as a Deutsche Bank spokesperson said. Crypto trading is not in the bank's immediate plans, the spokesperson at Deutsche Bank said, but they aim to offer crypto trading in a World Economic Forum paper back in 2022. Crypto markets, blah, 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 are struggling. Various banks, including Standard Chartered, BNY Mellon, and Societe Generale, offer crypto custody services. Most people don't know about a lot of this. This is what I mean. They are legitimately tricking you right now into selling your crypto and thinking that crypto is never going to return to the trillions and trillions and trillions of dollars. There's no doubt that it's going there, guys, to the tens of trillions. And on this channel, we absolutely try and keep everyone on that trail. So let's finish this off. As the digital asset space is expected to encompass trillions of dollars of assets, it's bound to be seen as one of the priorities for investors and corporations alike, said Paul Mully, Deutsche Bank's head of security services. Pretty big news. We always bring big news on this channel, and we always try and keep you up to date with the latest and greatest things happening. If you guys appreciate that and you're having a great Friday, let us know in the comment section. A like and a comment is always appreciated. Please do go and support the website and other social medias. Consider becoming a Patreon if it's something you feel you want to do. We've got a very good retention rate. And on that note, I'm going to love and leave you. Thanks for watching, guys. See you all in the next one.